this morning, today, as I'm walking by the lake. It's amazing how calm everything seems. You know, the gardens, it's beautiful, the birds, the lizards, everything seems pretty nice and decent out here. So relaxing. But while I think about the markets, and you know, I can't help thinking about the markets. I see euphoria. I see the markets moving up. The S&P 500 is above 7,500 now. And we have seen a lot of things going on. The Iran deal, that has pushed a lot of confidence, a lot of optimism. AI trades are booming as well. And so, you know, regardless of this, I'm wanting to be very disciplined with what I'm doing. And it's very important that while all this euphoria is taking place, you know, you have to be a disciplined investor or a disciplined trader. So today what we are seeing is a lot of optimism, and rightly so, you know, with the Iran deal that has pushed everything to new high levels. Companies are still doing pretty well. Microsoft, Amazon, Nevada, all of those are still doing well. And so, you know, the earnings season has kicked off very well. Companies are coming in very strong. A lot of liquidity in the market, so there's no reason to be fearful. But at the same time, my approach is to be disciplined. And this is how I'm going to be playing going forward. We have talked about it before, but moving forward, I'm very disciplined with what I'm doing. I'm not ignoring what's taking place, and I'll still be taking advantage of the volatility in the markets. So, as I'm enjoying the outdoors, man, take a little jog here and there. And guess what? The Florida paradise is beautiful. Lakes, trees, forests, all those things I'm breathing in as we talk and as we talk about the market. And I'm not telling anyone to be pessimistic about the market. What I'm saying is that we just have to be careful. And so, you know, most times investors and traders get very comfortable while the market is going up, and that happens just before things get uncomfortable. And so we know from historical cycles that market moves in booms and busts, and so we have to be careful. But I'm not calling a market top or a market crash. I'm just saying, hey, my approach is just to be cautious, make money, and keep going, and not to get caught with your pants down. And that's what I'm doing. And I'm going to be going into stuff later on that will surely demonstrate and illustrate how you're going to be keeping your money in your accounts and preserving wealth and generating wealth going forward, because this is all about generational wealth, providing for ourselves. And I've always mentioned it, retirement for your children, for your estate. If you want to give it away too, that's perfectly fine. But, you know, we're going to get into it a little bit more. So I'm here under a nice shady tree. You know what it is? A nice shady tree as I look at the iguanas running around. Many people don't enjoy that, what I do. You know, it's very cool with a mild wind, mild breeze on the lake right here. You know, so I think I see an iguana somewhere right here. I don't know if you're seeing it. You know, they get scared sometimes. Just like we get scared sometimes. We panic sometimes. But, you know, with years of experience in trading, I've been trading since I was 21. You know, we take out the fear, we take out the emotions. We've been through the booms and busts. You know, the dot-com bubble, the housing bubble, the meme craze, the 2008 crashes and real estate markets crashes. So, you know, the 2018 downturn, the COVID downturn. So I'm pretty much comfortable with what's going on, and I'm used to it. So my key approach is to learn from these cycles and do the right thing. Preserve wealth, preserve your capital, preserve your profits. And now, as I said, I'll be showing you and talking to you a little bit more about that. So I'm not chasing the market, guys. What exactly am I doing with my money? While many investors are trying to predict where the market goes next week, I'm just focused on a process. And we have discussed this process to some extent, but it doesn't hurt repeating it. And it's a process that allows me to generate income without having to predict whether the market is up, down, or sideways. One of the primary tools is I use the cash secured puts, and I'll be showing you that on screen right away. For example, let's look at this opportunity. So I'm willing to buy SoFi stocks. I have a position currently, and I wouldn't mind adding to it at a lower price. And so my strategy would be, and this is a real live example, is that I would be selling a cash secure put on the right side of the screen at 55 cents. And that's a delta of 29. So I'll be end up getting $55 per every $1,500 I put into this trade, which is about 2.5 to 3% per month. And I'm okay with that because if I multiply that by 12 or annualize it, I'm close between 35 to 40% for the year, and I'm okay with that. So this is something that I really want to outline to my audience, that we don't have to be chasing stocks, we don't have to be chasing hypes. And so technically, if I were to be assigned later on, 30 days out from here, I'll be acquiring the shares at about 1540, 1541, which I'm happy about because I'm taking on this position as a long-term trade. And so in that case, I'll be adding to my holdings, and I'm expecting this stock to be way above this come 2-3 years from now. I'm looking at a minimum of $25 within 12 to 24 months, and I'm okay with that. So if the option expires worthless, I keep the premiums. And if the shares are assigned to me, I acquire a company I'm willing to own. So you have to be going into a cash secure company that is solid and that you're willing to own. Either way, I enter the position through a defined process rather than an emotional decision, chasing the hype, chasing the market, chasing all these things. That's what appeals to me. I'm not predicting, not guessing. I'm having a process. When I evaluate any investing strategy, I ask myself 4 questions. Is it definable or is it defined? Right away, I define my position that, hey, I'm going to make $59 or whatever, $50 odd on this trade for every unit. Multiply that by 100 shares, you're going to be looking at about $59. And so that is coming out at about 3%, as I said. So it's definable. Do I know exactly what I'm trying to accomplish? Yes, of course. I'm trying to get into a stock at a lower price if I'm assigned, or I'm looking to gain premiums for the next 30 days. And so this process is repeatable. Can I execute the same process over and over again? Of course. And is it controllable? I can adjust and manage position when the market conditions change. So I can roll out, I can do all kind of stuff with this option going forward if the price moves against me. And finally, it is scalable because as I grow my portfolio and I grow my capital base, I can grow and increase my approach a lot more, whether it be cash secure puts, covered calls, whatever it is. And that's why when the market is soaring and everyone is excited, I remain focused on the process rather than the prediction. Remember, it's a process that I'm focused on. And so, we have to remain calm. We have to, ensure that we are doing the right thing. So the market may continue higher. AI may continue driving enthusiasm. Iran peace developments may continue supporting confidence. Or something unexpected may happen tomorrow. I don't know. And I don't need to know because my success isn't built on predicting the future. It's built on following a discipline, a repeatable process. And that's why I'm staying patient, staying focused, and most importantly, staying disciplined, sticking to a process, sticking to what I'm comfortable with. That is very important to me. It gives me peace of mind, and it tells me everything that I want to know. And so join me next for my next step in this video, looking at the wheel strategy, where we're going to execute a covered call and see what happened. See you in the next video.